Hello and welcome. You tune in to Market Fatafat with me, Ankita Saxena, and with me is Sharad Dubey. And this is a show where we get you all the top buzzers in trade, either on the back of news flow or on the back of technical charts. But first up, Sharad, the talking point right now is the recovery that we are seeing in the market. In fact, we gave a gap down opening on the Nifty. We have recovered almost more than 100 points. We are above 24/7. Almost around 24/750 levels is where we are at in Nifty. Nifty Bank also posing good recovery.
Well, yes, recovery is the theme of the day, but if you look at the larger picture, we are still stuck, Ankita, in a range-bound consolidation. Not much movement. Of course, in the last half an hour of trade, there was a 50 points up move coming in, and 24,750 levels where Nifty is at. Nifty Bank also, it's in the green now. There was a good recovery after a gap down opening, but largely flattish, both the benchmark indices. So the trade, whether it emerges or not, that's the question which everybody is looking for. And of course, apart from this, the advanced decline ratio, let's have a look. That itself is also even Stevens in the current manner. India VIX, that is also in elevated levels, but not that much alarming as well if you're a trader. But overall, net, the industry or the market is looking for a trigger. Will it be a global cues trigger coming in from trade deal, which is still impending regarding the details with US? Or will it be something coming in from the global markets in terms of geopolitical tension or the domestic earnings which we are actually gathering in? Apart from this, it's a stock-specific market. News flows are actually impacting the stocks more, and there are certain sectors which are doing well. The realty segment, we are seeing short covering in a lot of counters, apart from which pharma and metal also are seeing a good up move as well. But IT, for the fifth straight day, the Nifty IT index is down. Selling pressure coming in, especially from the weakness we saw in TCS. Also, the FMCG pack and the banking pack are seeing churns happening across sectors. But this is the overall view for the day. And Ankita, of course, let's welcome in Osho Krishnan. He's the Chief Manager and Technical Derivative Research Specialist at Angel One. Good afternoon, Osho. And from our research team, Kanishka is also joining us.
All right. Hi, good afternoon to both of you, and thank you so much for joining us. Let's get going with all the stocks that are in focus today. Let me pick up the first name, and that is SAIL. Now, SAIL was down and out almost 1% in trade today on the back of its quarter-one results. It has managed to recover from those lows, but it is now tilted. It has turned green. It is trading with gains of almost 0.3%. But let's look at the numbers. As far as the PAT is concerned, it sees a decline of good 40% coming in on PAT, coming in at 745 crores versus 1,251 crores on a sequential basis. The revenue also saw a downtick of almost 12% on a quarter basis. The EBITDA saw a downtick of 21%, and margins also saw a decline of 100 basis points at 11% on a quarter-on-quarter basis. Now, the sales volume stood at 5.55 million tons in quarter one, and crude steel production stood at 4.85 million tons. That's an uptick of 4% on a year-on-year basis, but a decline of 5% on a sequential basis. Now, apart from that, the management has also said that there's a negative, management didn't highlight anything specific, but negative stock valuation adjustment of 1,080 crore impacted the quarter one of FY26 numbers. So that's the word that is something that management really flagged off. Besides that, we also had a note by Antique that gave a target price of 129 rupees and maintained a hold call on SAIL.
Well, a hold call coming for SAIL, but do remember there is a global unwinding trade happening in metals as well as we approach towards August 1st trade tariff deadline as well. Joining us, we are having Osho. Osho, I would like to just take a small moment from you, especially on the market views currently for Nifty Bank, and then we'll move on to Bicon also, very important technical levels we are tracking. Hi Osho, could you just start with the market setup?
Yeah, very good afternoon, Sharad. Firstly, thank you for inviting me at the show. Well, yes, no doubt today we are witnessing some kind of recovery, but this should be considered as a kind of a breather, because in the last three trading sessions we have seen a very strong plunge in the benchmark index, especially from the zone of nearly 25,200. From there onwards, we have seen a very drastic plunge in the last three trading sessions. So currently, the market is just taking a kind of a breather. There has been some kind of a stagnation at current levels, but overall the trend remains on the bearish front. On the higher end, I am expecting 24,800 to 850 to be treated as a very stiff resistance for Nifty. And on the higher end, one should not become very much complacent that market have started gaining traction, because the overall technical structure is still on the weaker because we are witnessing lower lows, lower highs kind of a pattern on the daily time frame chart. So on the higher end, 24,800 to 850 should be seen as an selling opportunity for aggressive traders in the market. While on the lower end, I expect 24,600 to be seen as the first and crucial support zone because it coincides with even 100 exponential moving average. But any further plunge below 24,600 can even plummet the counter towards the zone of 24,500 and 470 on the spot levels. So I'm still having a bearish outlook, but from here onwards, I'm expecting a kind of 100 points of bounce where one should look for selling opportunity.
All right, 100 points bounce that could come in probably as a selling opportunity. But let's move on to a counter that you picked out for us, Osho. You picked out Biocon for us. Now, within the pharma pack, now this one's outperformed the Nifty Pharma as well. Biocon has done decent. What do you see in the charts for this one?
Overall, the technical structure of Biocon is very positive. On the monthly time frame, we have already witnessed a kind of a breakout. But on the weekly time frame, the counter is on the verge of giving a breakout from the very crucial juncture of 400. So 400 historically has been a very strong resistance for the counter. So I expect that any breakthrough, because overall now the pharma sector is into a very strong play. So I expect that any breakthrough in Biocon above 400 on a sustainable or on a closing manner can provide very strong momentum in the coming period. And with the kind of setup that it has made, I expect that a breakthrough above 400 can give a runway towards the zone of 440 to 450 in the very short-term perspective. So one should keep this count in their watch list. The time we witness a breakthrough, one should definitely try to accumulate it for a higher target of nearly 440 to 450.
Current levels, there is almost a 10 to 15% upside coming in for Biocon from Osho. But let's move on to the solar space. Important development coming in, especially when you look at the solar power producers like Tata Power, Adani Green, as MNRE has issued amendment to ALMM order for solar PV cells. Now, after the list comes out, within that, in the next month itself, the production can also start. This basically is an incentive for the solar power producers to start their overall production, and this LMM scheme augurs well when it comes to the entire industry, especially in the solar PV segment. And that's why stocks such as Tata Power and Adani Green are buzzing in trade. Tata Power in the mix, but in trading still in the green.
All right, so that is Tata Power that is trading in the green, albeit very, very marginally. But let me come to you, Osho. You figured Excite Industries for us. Now, Excite is something that a lot of analysts have been speaking about. Tell us, what are you seeing on the charts for Excite?
See, overall, this counter has been hovering in a symmetrical triangle on a very short-term point of view. And there has been a kind of a breakout in the last trading week, followed by some kind of correction that we have witnessed in the last 4 trading session. So there has been breakout, there has been retestment in the counter, and again the counter have started gaining traction. So I expect that the zone of 380, which has been a very strong support for the counter, should be auguring well for the buyers. While on the higher end, I expect that on the higher end, 400 will be the first target for the counter, and any breakthrough above the zone of 400 can provide a counter trend for the counter, and one can expect a decent rally or a trend reversal in this counter from medium term point of view. So overall, the technical outlook is very positive with a very strong support around the zone of 380 to 375, while any breakthrough above 400 can provide a very strong momentum in the coming period.
Exactly, Osho. And of course, auto ancillary space is something which we'll be looking out for, especially the exporters, because the European Union and the US deal is also completed, and the tariff issues which were there, they have been sorted. So the impending orders might be coming in, and you can have a look at these export plays as well when it comes to the auto ancillary space. But moving on from auto ancillary to the infra space, India's largest infra company, L&T, is expected to come out with its results today. And Kanishka, what are the preview numbers suggesting? Will it be a muted quarter because of monsoons, or can we see some sunshine here?
So as we are, our ET Now brokerage poll suggests that it's going to be a steady quarter when it comes to a year-on-year comparison. However, there could be some, subdued trend when it comes to a sequential basis. Now, the consolidated revenue for the company, that's likely to come in at 62,950 crore rupees. That's up about 14% on a year-on-year basis. But sequentially, like I said, it is expected to see a downtick because of a high Q4 base. EBITDA, on the other hand, that's seen rising nearly 14% to 6,392 crore rupees. With margins, they are expected to be stable at that 10.2% level. Profit, that may grow about 22% on a year-on-year basis to 3,389 crore rupees. Now, all eyes will be on order inflow, and as per Nuvama estimates, the order inflow is going to come in at 38,000 crore levels, which would take the total order book to about 5.5 lakh crore rupees for L&T. Key growth is expected from projects and manufacturing segment, along with strong execution tailwinds from the Middle East, power at T&D, and smart cities. Some of the key factors that we'll be tracking include margin outlook, order momentum from government capex, and updates on the Hyderabad Metro project. So these are some of the things that we will be watching out from the commentary of L&T later today.
All right, we will be watching out for those numbers and the commentary coming in. But with that, let's quickly look at a programming note. The beginning of the month often marks key financial activities, salary credits, bill payments, and planning expenses. But just as we plan our expenses, it's equally important to plan our investments as well. To encourage this habit, SBI Mutual Fund, in collaboration with the Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing amongst Indians, helping them secure their financial future. As a part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for financial well-being of you and your loved ones.
Well, yes, we'll be taking a short break and a lot of action coming in Market Fatafat with the stocks and important calls. Welcome back to Market Fatafat, and let's move on to the stocks. Varun Beverages in focus. Osho, what are the important technical levels looking like for Varun Beverages? Of course, the numbers, the growth engine of Varun Beverages, that has actually stopped. Earlier it was a 20-25% year-on-year basis growth engine, but now those numbers are coming down. Fundamentally, there is a slowdown, of course. The stock has taken some beating as well. Osho, what are your views coming for Varun Beverages? Is there any shorts in the offing?
See, overall, on the technical front, VBL is looking quite positive to me because overall, the counter has been into a very strong consolidation around the zone of 460. And from there onwards, we have witnessed some kind of positive build-up in the counter. So overall, I expect that volatility can be seen in today or maybe in next couple of trading sessions because of the quarterly earnings. But I expect that overall, the counter have seen a decent consolidation at the lower levels. And from here onwards, one can expect a decent or a slow and gradual up movement on the higher end. So I expect that any sustenance above the zone of 500, currently it is actually trading around 505, I assume. So any movement beyond the zone of 500 can provide some kind of positive momentum in the counter, and I expect that on a gradual basis, 535 to 40 can be seen as a target from short-term perspective. But again, going through the quarterly earnings, one should wait for some volatility to get fizzle out in the counter and then look for buying opportunity in this counter.
All right, buy on dips for Varun Beverages there. We did see the results also come out today. But let's move on then to the next counter, which is also an earnings candidate, and that's RailTel, that is in focus on the back of its quarter one updates. Now, RailTel is seeing, as far as the profit is concerned, that is up 35.8% on a year-on-year basis at 66 crore rupees. Now, you can see the jump up in stock coming in, 1.2% uptick coming in on the back of that. Revenue is also up 33% on a year-on-year basis at 744 crores. The EBITDA is also up 12% on a year-on-year basis at 115 odd crores. And the margin, however, is seeing a bit of a decline coming in. In fact, the margins are down 295 basis points on a year-on-year basis at 15.6% versus an earlier 18.5% as far as the margins are concerned. But RailTel is seeing a jump up on the big profit beat that's coming in of 35.8%. On the back of that, RailTel is up in a way 1.2% in trade.
Well, yes, RailTel buzz is coming in. Numbers are also decent, as Ankita had pointed out. But Osho, SBI Life is in focus. Recently, the numbers also came. Numbers were decent. We saw some profit booking in certain counters in the days ensuing. the numbers coming out. So how are you looking like now, the SBI Life in the charts, Osho?
See, overall, the technical setup for SBI Life is quite positive. In the last trading session, we have seen a kind of a sloping trendline breakout also, and the counter is comfortably hovering above the 20-day exponential moving average. So short-term moving averages and short-term trend is very positive for the counter. No doubt the counter have corrected approximately 1.5% in the day, but technical structure still remains on the positive front. So I expect that in the coming future, if there is any kind of sustainable move beyond the zone of 1850 to 1855, one can expect a decent rally in the counter. In a very near-term perspective, 1920 is the target that I am expecting in this counter for a very short-term perspective, while on the lower end, the support lies around the zone of 1780 to 1790. So that is a very strong support zone, and one can look for buying opportunities with the prevailing risk and reward.
Yeah, so positionally, there seems a buy call coming in when it comes to SBI Life. But moving on, another Nifty company, TCS, is under selling pressure, and sources to it now say that government is keeping a watch on the layoffs. Yesterday also the stock was under pressure as the news flow has come was that company is clipping almost 2% of its workforce, and that's roughly 12,000 persons in the coming year for retrenchment. And of course the company stated in an exclusive treaty now as well that this is not regarding AI, but this is regarding the upskilling issues. And some news flows are also coming from ET when it comes to the freezing of certain bonuses, as well as the senior management level stuff which was announced earlier. But TCS in the day's trade also in the red, trying to make a recovery attempt, and just above the 3,000 mark currently we are seeing.
Alright, so that's TCS on the back of that news flow. But with that, it's a wrap on this edition. We are completely timed out. Kanishka, Oshko, thank you so much for taking the time out and joining us with all the buzzers. With that, it's a wrap from Sharad, and I will take a leave. Thank you so much for tuning in. Don't go anywhere. Market action still continues on ET Now.